So realistically, since Trump's election victory, a lot of the world has been a little bit frozen in terms of not knowing what's coming, what's going to take place. And in the precious metals industry, what is normally fairly smooth sailing has been pretty interesting. We've seen just over 30 days ago, if you were a buyer from one of the bigger banks, the bigger refineries, if you're buying what is called COMEX deliverable brands, or the LBMA, London Bullion Market Association, you're buying that raw material, banks started charging a premium. And a lot of people are wondering what's going on. Is there a silver shortage? What is happening? As time progressed, as we got closer to Christmas, suddenly I think people started to figure things out that maybe this has something to do with the tariffs. Nobody really knows. When Trump is talking about tariffs, does that mean raw material? Does that mean finished goods? Is there an exemption for gold or silver or not? And so banks started pricing in a little bit of risk. And so let's just assume, let's take silver, let's just say we're $30 an ounce. And suddenly Trump does a day one 10% tariff. Suddenly someone owes now $3 on an import of silver. And banks typically work off of pennies. And a lot of people don't understand that. So traditionally a bank will short or sell a contract on the COMEX. They'll sell it in a forward month, and then they'll purchase the physical metal somewhere, whether they're buying it from Korea or Poland, South America, they're bringing it over from London. They have to wait till that gets on a boat and gets imported. So it takes more than a month to get here, and then they deliver into that contract, right? And they take that spread. So that arbitrage suddenly is at risk, because if you're bringing in that raw material and Trump puts on a tariff, suddenly what you're trying to do is make pennies. You're getting railed. So we're in a situation where the market has, as we entered the Christmas season, as we entered the new year, and now we're in now the second and now third week approaching here of January. Here we are facing even higher premiums. So that's what's called an EFP, exchange for physical. Typically, our industry, we don't talk about that to the retail public, or most people don't even know this exists. And really, an exchange for physical means you're going from a paper product, right, and you're taking delivery. Well, there's tiny fees. Normally, they're pennies or a nickel. Right now, they've been averaging over the last week 60 cents to over $1 per ounce. So for that raw material price, so again, if you're at $30, you're seeing that if you're buying from these sources. The reality is most of the coin industry, the bullion shops, they don't even know this is going on because they're not active in this marketplace. But since we are actively buying from these markets as a manufacturer, we use a lot of these brands. So suddenly we're faced with a really interesting situation here. What's going to happen on January 20th when Trump comes into office? So not only is silver being impacted, we're starting to see EFPs, the exchange for physical price, starting to move around with gold for deliverable gold. Just today, another big change happened. So we saw a situation where typically if you're a manufacturer and you need to lease metal, so very often large manufacturers, commercial manufacturers, and many industries, they will lease metal from the banks. Traditionally, let's go back a decade or more. The lease rate factor on silver or gold is usually 1%, 2%, 3%. I'd say over the last couple decades that I've been paying attention to, it's always been incredibly low single digits, sometimes even under a percent at times even. Out of nowhere, today it jumps to 12% on gold. So we jumped, think 10% in one day to lease your gold. So if you're a manufacturer, let's say you're in jewelry and you're doing a leasing program from a bank and you lease it while you're manufacturing and then you buy it, suddenly you're paying way more. So people's bottom lines are being affected greatly. What does this mean? Is there a metal shortage of gold? Is there a metal shortage of silver? And I think the reality is the metal is somewhere in the world, but is it in the right form? And is it in the right place? So clearly we are seeing, some people are calling this like a stock out. So metal right now is coming out of places like Europe in particular, and it's coming to the United States as we speak. I've personally spoken with a lot of the armed transport companies. They have never seen this amount of material being scheduled to get here before Monday, the inauguration day. So these companies are incredibly busy bringing in physical gold and silver. So one benefit for the United States is that we're going to see stockpiles of precious metals rise. The question is can we continue to replenish it? So silver in the U.S., for example, roughly 18% of the silver consumption in the United States comes from the U.S. So that means more than 80% is imported from somewhere else. What happens if Trump throws a 25% tariff on Mexico? Mexico is a beast of a silver producer, and most of that material comes to the U.S. What's going to happen? So we're facing really interesting times.